What are dividends, and can you really live off of them? So what are dividends? Well, it's pretty simple. Dividends are cash distributions made to shareholders from a company's profit. So basically, a company will pay you money to own its stock. That's it. So what kind of companies would pay dividends? These are companies that we call value companies, companies that have been around for a while, have good cash flow. Companies like Coca-Cola, Nike, Home Depot, Microsoft. Okay, sort of the blue chip companies, not the younger startup to growth companies, like tech companies that are just starting out. Those kind of companies want to put all their money into growth. So they don't pay a dividend. They take any profit that they make and it goes right into research and development, getting into new markets, innovation, advertising, sometimes even raising more funds from other investors. So when we talk about dividends, there's something that we need to pay a lot of attention to, and that's how they're taxed. Because there's two types of taxation, two types of dividends. Ordinary dividends, qualified dividends. Now the IRS taxes ordinary dividends at your regular income tax rate. So think of ordinary dividends being taxed just like your job. But qualified dividends get special tax treatment. They're treated at the lower capital gains rate. So qualified dividends are going to keep more of your money. So what companies pay what? Well, it's pretty simple. Qualified dividends come from all the companies I just mentioned. Just your traditional companies, nothing complicated. Ordinary dividends are sort of like specialty companies. These are things like real estate investment trusts, business development companies, closed-end funds, master limited partnerships, which are usually oil and gas companies. Anything that includes something like derivative income. Like if you bought a covered call ETF, like JEPI, for example, pays a really high dividend, but that's taxed as ordinary income. So you're not really keeping as much as you may think. So anything that uses derivative income, like a covered call ETF, will be taxed as ordinary income. Now, let's take a look at the tax tables. You can see here, this is the qualified dividend tax table, or the capital gains rates. Now look at the top line here. For a single person, you can make up to 47 grand a year and pay 0% tax. Now I just want to contrast that with the regular income tax table, or the ordinary dividend table. Take a look here. Two lines down, you see up to $47,000 as a single person. You're paying 12%. So that's a pretty considerable difference. And if you just multiply that out over how much money you have invested, you're going to save a whole lot of money by being in qualified dividends rather than ordinary. Now, sometimes if you want to be rich, all you have to do is look and see what rich people do and emulate them, copy them. Rich people invest in qualified dividend paying stocks. We know that. That's not my opinion. You could go online and check out the data yourself. The reason why I do it isn't just the tax treatment. It might seem that way, but it's also because these types of companies are more stable. You can make maybe a higher dividend in something like a real estate investment trust or business development company. But the problem is companies like that depend on financing for their business, which means they're susceptible to things like interest rates and various government policy and state laws, and they're just less stable. Most people want to be able to invest in their portfolio and forget about it. They want that peace of mind. They don't want to be worried. They don't want to have to follow the market every day. They want to put their money in something and know it's going to grow. And if they put their money in something that pays a dividend, they want to know that that dividend is solid, that it's something they can rely on, they can count on. So let's get back to the original question. Can you live off dividends? The answer is yes, you can. I do it. And a lot of other people do it. Probably not as many as you think, but to me, it's sort of the holy grail of investing, to be able to have enough passive income that you could live off of it. Now, there's one big catch. And there's a big reason why that, truthfully, hardly anyone will ever get to live off of dividend income. It's simply because the amount of money that you need to invest in the market is tremendous compared to what you're getting back. So you need to put a lot in to get a little bit back. Now, let me give you an example. I'm going to take a very well-known dividend ETF, the SCHD. That's the Schwab S&P 500 dividend ETF. It has a yield of about 3%, which means if I invest $100,000 in that ETF, I'll make $300 a month. Now, that's nice, but you can't live off of $300 a month, right? Well, maybe if you're Amish. But let's say I needed $5,000 a month to live. Okay, $5,000 a month. That means that I need to buy $1.66 million worth of SCHD shares to make $5,000 a month. That's a lot of freaking money, baby. 1.66 million? That's a lot of shkadol. So what I'm saying is you need to grow your portfolio. You need to grow your net worth as much as you possibly can, however long it takes, in order to get some significant dividend income. Something that will at least cover your rent, cover your mortgage payment. If you get to that point, I mean, that's huge. I know everyone wants to have enough to take a live off of, but supplemental income is supplemental income, right? A little bit is more than nothing. Now, you don't want to make the mistake I did. When I started out, I was enthralled with the idea of passive income and dividends. So I started investing in a dividend ETF, the VYM. That's the Vanguard ETF. I had, I think I started with $5 a month coming in maybe. I know it's nothing, but it's still passive. It made me feel good. 20, 40, 60. I think I got to the point that I had $80 in passive income coming in every month. And then I thought, okay, I'm never going to get to the point that I could cover my rent, much less live off of this money, because I just don't make enough. I just don't have enough income. So I went online onto an investment calculator. I typed in the numbers, and I found out in order to make $5,000 a month, I would be able to get there at my current rate by the time I think it was like 164 years old. It was something ridiculous. So even though dividends sound so exciting, especially when you're starting out, just remember, you have to have a lot of money to put in to get just a little bit back. So you want to focus on growth when you can. Grow your money as much as possible. Take your disposable income, put it into growth funds, growth stocks, whichever you prefer, and grow your net worth so that hopefully later in life, you'll have enough that you could take some money out of the growth side of your portfolio, put it into the income side of your portfolio, and have a nice pool of money coming in from dividends. So grow your portfolio as much as you can, and hopefully at some point in your life, you'll be able to make some significant dividend income. Don't forget to like and subscribe. Add a comment below, especially if you're investing in any kind of dividend producing security. I'd love to hear from you. I'll see you guys next time.